Hey, what's up, everybody? It is Friday. July 21st. Still here in Florida. I'm going to head out to Los Angeles on Monday. So I'm looking forward to that. I'm pretty excited. Going to be a West Coast guy. And, okay, so the market, it was up most of the day, then reversed its gains at the end, but small declines, but it's been a very positive week. Almost did 10 weeks up. It's the biggest or the best performance since 2017. You know what gets me is I'm seeing a lot of articles now about how investors are turning bullish. Like, where were you when the market was way down? Like, I'm sure a lot of you were now thinking, or are now thinking, oh, I got to get involved in stocks. But I've been here the whole time through that whole downturn last year with the Fed raising interest rates and trying to explain to everybody how that's not going to be a negative, okay? And you got to buy into that decline. And I'm still to this day shocked that people's investor behavior is so contrary to what they're trying to achieve. And I always use this analogy, as consumers, we are very, very savvy. Nobody will buy unless it's on sale or unless they get a price discount or whatever. But when it comes to investing, people do the exact opposite. I mean, they panic and they sell when prices are low, that's when they should be buying. And then they get all excited and bullish when prices are high, and that's when they should be selling. And I don't know how many times I could repeat this. I don't have a big following, whatever I have here, 7,700 or whatever. But it doesn't make a difference. This is just sort of ingrained in investor behavior. And I cannot figure it out. I cannot figure it out because as consumers, they have the total opposite behavior, but this is exactly the same situation. It's exactly the same situation. And I saw a thing today, this triggered me when they said cash holdings, investors are bailing out of cash. They went to cash last year when the market went down, which is exactly the time that they should have been getting out of cash and buying stocks like I did. My portfolio's at an all-time record high. But yet they panicked and they sold stocks and they went into cash. I have a subscriber who told me it was maybe back in October when the market was bottoming out. He has a client, this guy, my subscriber's an accountant, and he deals with a lot of small businesses and medium-sized businesses. He has a client, he just he couldn't take it anymore. It was that's an emotional reaction. I can't take it anymore, the stress. But if you rely on your emotions when you invest, you're never, ever, ever gonna make money. You're never, ever, you just sabotage yourself at every step. Emotions, I understand it. Everybody goes through emotional situations in their lives, whether it has to do with investing, whether it has to do with relationships, whether it has to do with whatever, the family. If you rely on the emotions for guidance, you're going to be wrong every single time. You need to use the frontal cortex, that's the rational side of the brain. But unfortunately, the emotional part is the primitive part. It's the reptilian part of the brain. It's very, very powerful. It was there. It was designed there to protect us from danger. But this is not a danger. I mean, stocks going down, that's not a danger. That's an opportunity. I don't know how else to say it. I really don't know how else to say it. I mean, I see these articles all day long about how, now they're coming back. Now they're coming back? I mean, okay, maybe you didn't want to come back in October, which basically I was telling everybody here. You could go back and watch my videos in October. I was saying we have hit the inflection point where the negative impact from interest rates are going to be offset by the positive impact from fiscal flows, interest income transfers. Okay, so maybe you didn't listen to me in October, but you had November, you had December, you had January, you had February, then March, April, May, June. Now you're coming back? I mean, seriously? What's wrong with you? Now, that doesn't mean it can't go up from here. It definitely can. I mean, we're going to have, like I've been saying, like fiscal flows are really going to peak out. Well, they may have already peaked out, but we still have August 1st, which is the first of the month's payments. I said this yesterday. You know, that includes Medicare, Medicaid, military pay, veterans benefits, disability, all that stuff. That's like $100 billion leading flow day. And then we have August 15th, which is a quarterly interest payment of about, it's going to be like 51 billion. So we got positive flows now, you know, if you look out until August 15th. But generally, I went back and I looked at the market, like it typically peaks out about a week before that quarterly interest payment. And then when you come into September, we have the corporate tax drain. Then October, we have personal income tax drain. People who didn't, you know, who filed for extensions like yours truly. And so we got to wait till November when we have another quarterly interest payment. So we have a period now that we're coming into, which is going to be negative from a fiscal flow perspective for the market. All right. I don't know what else to say. Like, it's just like I read this stuff and I watch this stuff, and it just on the one hand it amuses me. On the other hand, it frustrates me. It frustrates me because why? Like I think I should have like more subscribers, or people should understand this, or yeah, I should have more subscribers, period. On the other hand, it you know, I'm amused by it because like the behavior is so apparent and it's so obvious and it's so like counterproductive. Not even counterproductive, but it's such like a personal sabotage. And it's fascinating. Like, you can do a whole sociological thesis on this. Like, why are people so savvy when it comes to consumerism, consumption, consumer behavior? And why are they so bad when it comes to investing? Those two things are like diametrically opposed, and I don't understand it, because it should be the same exact behavior in each situation, but it is not. It is not. I mean, they panicked, they sold out. Look at a stock like Meta, right? It used to be Facebook. Now, I was recommending that stock last year when it was going down. I said, don't short. Look, I got a siren again everywhere I go. You guys know me from New York with the sirens going like 24/7. I said, don't short Zuckerberg. Don't short Zuck. He's a very, very smart and savvy guy. Incredibly intelligent, very savvy. Like, don't short him. And that stock came all the way back up, and I was buying that whole stock. I was buying that stock, you know, when it dipped down. I was buying it massively. I was buying Netflix massively. Like, you know, that's how you do it. It's not even like, don't even think like I know more than you, which I do, but it's about like, it's the old parable. It's the old story which Warren Buffett loves to tell. Mr. Market, he comes with a bushel basket of stocks. He knocks on your door. He said, okay, I'll sell you these for X. He comes back the next day. He said, I'll sell you these for X minus whatever. Same stocks, same companies, same business outlook, same everything, but now they're discounted like 20, 30%. You're not going to buy it? Of course you're going to buy it. But people don't do that. People do not do that. Explain to me why that does not happen. Like this is a crazy element or facet of human behavior that they just react totally different in investment situations than they do in consumer situations. And like, I'm fascinated by it. You know what? I got to tell you, it creates opportunity. If you know this, and if you know how people are going to behave, you could take advantage of this. Grow your portfolio, grow your wealth. Look, if you're a young person listening to this, I mean, I've been on 4 futures exchanges, okay? I've been a member of 4 exchanges. I was standing in the pits for over 10 years. And I know what it is to short-term trade and you know, futures and stuff like that. But I have to tell you that there is no greater wealth-generating mechanism, instrument, environment, whatever you want to call it, than the stock market. It really is. You have to have a little bit of patience, not a lot, and you just have to like behave in a certain manner. And if you're young, if you're not investing in the stock market, you are a fool. I'm sorry to say, you are a fool. If you're old, I'm 66, and you're not investing in a stock market, I still think, and if you're in good shape and if you're in good health, I still think you are a fool. It's the greatest, and it's liquid and everything. It has everything going for it. Everything. And it's a shame that they don't teach this in schools, because they should teach this in schools. They teach ridiculous, inapplicable things in schools, and the whole education system should be changed. And I remember when my kids were going to middle school and high school, I ran for office in the school. I got elected, but I ran for office on the promise to educate the kids on finance, which I did. But it has to be broad-based. It's not going to be me in one school. They just don't do it, and they should do it. It's a shame that they don't, because they keep us prisoners of our education, and that is a terrible, terrible thing, being a prisoner of your own education. But that's, you know, that's how the structure is. So it's not that hard. You need the right behavior. And those of you who are listening to me, I'll help you in any way that I possibly can. I had a guy today. He was a former subscriber. He's out in Montana going fishing. He invited me out there to go fishing with him. I can't go this year, but maybe next year. And I've been in Montana fishing before. I've been in Idaho on the Salmon River. But next year, let's see what happens. I love it out there, man. Too many New Yorkers, though, man. I went in the 1990s when nobody was out there except the Montanans. No New Yorkers, but now, like, I'm getting away. I'm going to be a Californian. All right, everybody. Have a great Friday. Have a great weekend if I don't see you. And next time, if you don't see me over the weekend, next time you're going to hear from me, it's from Los Angeles, California. Take care. Bye-bye.